Good evening. It's Vijay here. Today is 27 July 2025. Welcome to our weekend review and reflections on some topic which is of interest, which is not, very current. It is not about the current market commentary, but something which may affect us going forward. So today I have been talking about catching falling knives. This has happened because in the recent past we have had situations where suddenly out of the blue the prices of certain stocks fall down and people think it's a bargain and then they try to rush and then they begin to lose further because the prices keep coming down, and there have been many such examples. The latest one happens to be IEX, which happened on Thursday, where the Central Electric Regulatory Authority said that they will do something called coupling. Now, I will not talk about IEX specifically here. Maybe I will use it as an example. But before that, what are the let's say advantages or disadvantages of a falling knife, because it's a high risk high reward. Because you see, in the past stocks have fallen and some people who bought it at the bottom have felt they've made quick money because the rebound also has been sharp. But in case of a falling knife, it is not always true that your rebounds will be sharp, and maybe when the rebounds are there, those will suck in more people because it looks like bargain, because the script was trading at higher prices than what in the very recent past. So we have to remember that cheap can get cheaper, and there could be many reasons why the prices suddenly fall off. So some of the reasons could be earnings, financial reports. Suddenly, you come to know the earnings have crashed. Then there is some economic data or inflation or unemployment rate. This affects mostly the mainline indices. Then there is a technical breakdown, which happens in overbought conditions, especially at the end of the bubble, like what we saw in 1992, 2000, 2008, when everything crashed because it was a very big bubble and that was a falling knife across the markets. Then there could be fundamental breakdown specific to the stock. It could be management issues, earnings, and cheating, fraud, all those kind of things, which suddenly may come into limelight. But many a time, I have noticed in my 35 years of experience, these things about fraud, cheating, and all will be reflected in the prices much before the final blow. Okay, let's discuss some of them here. Take Satyam Computers. Everybody talks of Satyam Computers, saying that that was a falling knife. It fell down from, I think, about 178 or something in January 8 9 to as low as 11 rupees in the next day itself. That happened because the promoter, Mr. Ramaling Raju, went on TV and said that he had committed a fraud. So earlier that year, in 2008, it had peaked out at 544. Just note, it was lower than what it was in 2000. At 723, it peaked out in 2000. 8 years it took, and yet it did not even cross that high. While the Nifty, Bank Nifty, so many stocks went out to make significant highs. We had a great bull market between 2003 and 2008. And Satyam, which was one of those leading stocks, which was preferred to even Infosys, Wipro, did not participate in that bull run, and it was struggling all the time. If you look at it, for quite some time, this is a monthly chart for many months leading to 2008, it was struggling. Now, we knew for a fact that there is something wrong in Satyam in 2000 itself. It did fall with the dot-com crash to about 55, but it bounced back 10 times. It was a 10 bagger between, say, 2001 to 2008. So you could not find fault with somebody who's buying Satyam Computers, even we know that there is something wrong. But when it finally came, it suddenly fell down from 178. Incidentally, I had shorted Satyam, I remember very clearly, at around 168, just 3 days before. And I had put a stop loss at about 175, and it got triggered. And the very next day, it fell. And just imagine my bad luck, you can say, from 175, it fell to 11 rupees. It shorted in the futures early 2009. This was when it fell down. So now, why did Satyam? Why were we bearish on Satyam? because if you look at the promoters holding was continuously coming down. In March 2001, promoters holding was 25. Every year it was coming down 22, 23. By December 2008, the promoter holding had come down to 2. So we knew there was some problem, and these were red flags. Anybody could have seen that, but the market refused to believe it. By and large, the people, because as I said, from 2001 to 2008, from 54 it had gone to 540. So it was a 10 bagger. So nobody believed this information which was available in public domain, and then people paid heavy price for it. But subsequently, people who bought at around 12, 20 rupees, it closed, I think, on that day, January 10th. It went up to 59, and then it became Tech Mahindra, and many things happened. Good for Satyam, because Satyam was a great company as far as the people working on it. It's only the management which was corrupt. Then you take another case of Island Affairs. This was in 2018. The first default came somewhere in June of 2018 when the price was around 53, and after that it fell to 4. But if you look at it, it had already fallen significantly from the highs for the previous year itself. So you could see in the prices that something was wrong with Island Affairs, and there were a lot of talks that they are covering their losses, they are not showing it, and but they once the first default took place, it slid very significantly by about 90%, you could say, from 53 rupees to 4. And since then, because it was a fraud of huge magnitude and it shook the markets, so it has never recovered from that. So if you caught a falling knife in case of Satyam, you were okay on that day of the fraud because it came down and closed at 20 rupees. It never went to that rate after that. Whereas in case of Island Affairs, if you had bought it at even let's say around 20 rupees or 30 rupees, it came down to 4 rupees. Now take case of S Bank. S Bank had a problem since 2012. Actually, it was not that people say people bought from 400. It was about 400. They've got a 200 and all that. That I don't know why people were buying because I was not active in S Bank. I only know that on in March 2020, the RBI took action. They imposed a 30-day moratorium throughout the directors and brought in somebody from SBI. And that day was really a falling knife. It came down from about 30 rupees, 35 rupees to 5 rupees. I remember we bought it around 6, 7 rupees. That was because we felt it was ending, and RBI's action was a good action. So subsequently, it went up to about 80, 90 rupees. Then it fell down, and then you see, it has never gone below the day when the falling knife happened. It was a regular falling knife for many years, but I'm saying the day when RBI took action against them, that day, if you had bought, you would have immediately made about 20 times within the same month. But then you had COVID later in the month, and then it collapsed like all other shares. It didn't recover as much. We did buy S Bank later at around 13 rupees. Somewhere in 2021, and we held on till it reached 21, 22, and we got a reasonable good return within about 18 months. So about close to about 70% return we got in 18 months. So that was a good thing because we realized that S Bank is not going out of business. SBI had come, HDFC, Kotak, everybody had put money as per RBI as nodding. So there you had SBI, S Bank doing very well on the last leg of the knife falling. But knife was falling from 450 rupees. So people who bought on every decline thinking, oblivious of the problem and no solution. See, most important is that there will be a problem. There was a problem in Satyam, but the government came swiftly and so created a solution. In case of Island Affairs also, they did it, but Island Affairs was completely corrupt. So there was nothing much government could do on that. Satyam they could do. And in S Bank, they came in at the last minute when already it had gone down to almost like say 5 rupees, which is almost zero there. So that helped because they brought in a new management. They did bring in a new management in Satyam, so that helped. Now the later ones are Jensol. Jensol again, you had the default which came in at 800 rupees in end of December last year, but people did not bother about it. Then in March of 2024, 25, there was a 25. There was a rating downgrade by two major rating agencies. They downgraded it to default category, yet it was at 500 rupees. After that, if people were buying, then I don't know what one can say because default after default were coming. And if you simply believed the management rather than what the rating agencies did. Normally, rating agencies put a downgrade to default only at the extreme stage. So if they put it at 500, even if you could have sold it 400, 300, 200, whatever, but you see now it has come down to 50 rupees. So now that whole saga is over. So here is a clear case of falling knife, but you knew the information that there is something wrong with Gensol. Take another case of Brightcom Group, which was a lot of people, big guys recommended it, but there is again a problem. When it got listed around 2018, the shareholding continuously came down, just like Satyam, from 39% to 18%. Satyam, of course, came down much lower. And when SEBI did an audit somewhere later, they found out that the shareholding, the management shareholding, the promoter shareholding was only about less than 4%. So you clearly had information that the shareholding was falling from 39 to 18%, even though it was fraudulent, even at 18%, but you have no business to be buying it, and now it has gone bust. So again, clearly information was available in the public domain, and yet people went and bought. This is clear case of fraud in Brightcom, like it was case in Island Affairs, and like in case to a great extent in Yes Bank and Satyam. But action taken in Brightcom, action was taken, accepting that the promoters now are being hounded and all that. Recently, we've had three such cases where there has been what we call a falling knife. One was on Vent, which incidentally disclosure is we hold Vent, Murugappa Group tied up with 3M, and on 14th of May 2025, when the stock price closed around 10,400. When took, 3M decided that they will sell off lock, stock, and barrel. They had 37.5% stake. Murugappa had 37.5% stake. So they sold the full 37.5% stake on 2 days, on 15th and 16th, and they sold through a QIP. They sold to both to institutional investors and even the retail, and their price came down to 8,350. They were willing to sell it at any price. So 8,350, when we saw that around 8,500, we saw it stabilizing, we went and bought it around 8,400 to 8,500. However, it did come below 8,350. It actually came down 8,200. The reason we bought was there was no problem in the management of the company. Murugappa Group is a very old company from Chennai. They are known for turning around stocks, and Vent is a good company. Maybe 3M for whatever reason had moved out, but before that itself, from around 18,000 it was coming down. So from 18,500, which was the last year, November, December, so you could sense something was wrong. But when the final blow happened is when we went and bought. Of course, subsequently it went to 12,900 and it has come back to 9,675 on Friday. I think it will take some time. We are very patient on that because there is no problem with the company. They also have a group company called Coromandel QME. That is so that Coromandel thing, that both of them are in the same business. So we are assuming that Murugappa will take care of the interests of the shareholders, because they have never defaulted or done something negative. So this is a good company, but because one of the promoters decided to go lock, stock, and barrel and were willing to sell at a discount, that share price came down significantly. So we thought it is a bargain. We believe it is a bargain, though results are not great, but that is because of engineering. Companies are not coming up with good results. So we believe that it will sustain. Of course, one can never say. It may go down below our price. We may end up with a loss. But we are confident here when we are buying, because this has got nothing to do with any fraud or any mismanagement or any downgrading or anything. Then there is this Proteion. Proteion supplied. They got 61% of their income through PAN, which they were doing for IT, and the 61% of business came through PAN, and they had a 64% market share as far as the PAN market was concerned, the PAN card market. Now, IT came up with a new set of PAN, and that is, they said Proteion is not been shortlisted. So it fell from 1,440 on 16th May when the news came, to by 19th May it had fallen down to 981. We saw it, and then we were not very confident because now the main business is gone, and now it is 800 rupees. Maybe they will get business. The management is hoping, but right now we are not very interested. So there is no fraud here. It is just that one major business, has gone away, and that was large, 61%. Then the latest one which has happened is IEX. Now in IEX, it was on 190 on 23rd July, Wednesday, and then the CERC came up with this proposal saying that they are going to change the way trading is done. They call this market coupling. I will talk a little more about IEX later, maybe next week, of what we are doing. What we have done is we have gone through, we have studied IEX, and as far as our understanding is concerned, and as far as we have listened to the management con call, it looks like IEX is not a bad buy at around 140 is what we bought on Friday, but just we have entered, and we will have to see whether we have to watch it carefully. But if you remember, already the CERC proposal was there about actually more than 2 3 years ago. When that proposal came public, that time it had dropped 15%, but then it had bounced back. It never came back to those levels. So one has to be a little careful. Some insider trading has happened from 240 levels. It had already fallen to about 90%, 190, and then from there it fell to by 30% to around 131. Now, if what I looked at when we were buying on Friday was when the panic happened, where continuous downward circuit happened on Thursday, the volume was 127 million, which was itself very huge. But on Friday, on the rebound, there was 300 million. So it started from 137, went to 147, came back to 138, and then closed somewhere around 145. So we bought somewhere closer to the lows because we observed that the volumes were building up and the price was not coming down. And then we had a con call. The results also came. Results were good. Of course, this thing is slightly complicated. This market coupling, I'll talk about it, as I said, next week. But we are fairly confident that we are somewhere near the bottom. And if we are okay to buy it, because you see, this is a technology intensive area. It's like a stock exchange. So now I believe that they will not go out of business, but their share price, in fact, they are what the coupling is happening in what is called the DAM market, day after market, and there they only have about 35% of the 35% of volumes come from that. So net, it looks very interesting because they have other proposals. They have stake in Indian Gas Exchange and a couple of other exchanges. So it looks an interesting proposition, but you cannot be 100% sure in the market. So first of all, it is not any investment advice. This is what we have done. We have bought into Vent, and we have bought into IEX. This is the disclosure from our side. So what should anybody do? One should do their own due diligence, look at it, whether it's a fraudulent company, whether there is something change in shareholding like what happened in Satyam or Brightcom, and then see the prospects of the future and whether any government action is there, and then take a call. So I found this very interesting thing. Some lama who says, "Don't catch a falling knife, watch it, you then make soup, and the llama will stay nourished. Don't get near a falling knife." So whatever you do, I hope it is successful. And thank you for joining on this evening. So I'll come back tomorrow morning with my pre-market commentary. Till then, have a good weekend. Thank you for joining me.